Hi, my name is Stacy Brown and I am your community agent. The purpose of this video is to bring awareness and give you a broader understanding as to how to purchase and utilize insurance products to its fullness. I do believe that we do value what we understand, and when we understand the things that we do value, we are willing to invest and pour into them. So it would be my job to give you that understanding moving forward. That way you would know which products to purchase, how to utilize them, and how to invest in them. And not only that, how to create generation wealth with them. Now, before we get started, let me tell you a little bit about myself. So I am currently an independent agent that has 10 licenses. I am licensed in both life and health. This allows me to counsel and write a variety of products. I have written products such as term life, whole life, universal life, final expense, fixed index universal life, index universal life, mortgage protection, accidental plans, health and supplement plans, and last but not least, annuities, which I have grown to love as retirement plans. Let's start with the mere basics. And even with the mere basic, we will always be addressing three things that all families will always be financially impacted by. And those three things are death in the family, critical or terminal illness, and not enough money for retirement. And introducing these products is going to bring about some awareness as to how to use them to address one of those three things, and sometimes all three of them. So let's begin. So let's begin with our term life. Term life is simply what it says. It's a policy that only covers the contract of the policy for a certain term. That term can be 10, 15, 20, 30 years. The advantage of term life is that, you get a lot of coverage. It gives you the greatest coverage for the cheapest price. And that's fine and dandy when you're young. But what about when you get older? So here's the disadvantage of term life that people do not truly understand. That it is temporary coverage. There is no cash value in it. And guess what? When the term comes to an end, you don't just lose the policy. You lose all the money that you paid into the premium. Yeah, you don't get any of it back. Term life is not a bad thing, but term life is great if it is attached. If it's being taken out for other stuff, whatever. Okay, so let's start with our term life. Term life is simply what it says. The policy covers you for a certain term only. The advantage of term life is that, you get a great amount for the cheapest price. Now, that works for you when you're young. But let's talk about the disadvantage of term life. Term life, number one, has temporary coverage. It has no cash value. You don't just lose protection, but you lose all of the money that you have paid into your term life if you do not utilize it the right way. Now, with some term life, you can purchase. Some carriers do offer term life with other riders. You can purchase a ROP with your term life. What does that mean? It means that you can purchase a term life and for just a couple of dollars more, add on a return of premium rider. What does that mean? That means when your policy comes to an end, you are able to get a fraction or all of your premium back. There are even some carriers out here that actually have cash back policy. That is what they're called. That means that once your term contract comes to an end, rather than you losing protection as well as all of your premium, you would get that back, and you can actually use that to either start you another policy, or hopefully it'll be enough money for you to invest in a whole life or something that does have a cash value. Now, there are some additional types of term lives out there. You have an annual renewable term. Check your policy because you can be locked in one of those. But here's the thing you need to know about term life as well as annual renewable policies or any policy that is like a term. Number one, sometimes the policy will restart itself. You don't have to go through the insurability process again, meaning that they will not look into your health history and everything, but they will start the policy out at the current age that you're at. So you're no longer going to get the policy at the price that you were able to purchase it a couple of years ago, 5 years ago, 10 years ago, whatever that annual renewable term is. And a lot of times that is to the carrier discretion. This is another thing you need to learn about term life. With some term life, it will only cover you up to a certain age. Now, situation. I did have a client who came to me about her grandfather. Grandfather turned 85. He did not know all the way up to now he was actually in an annual renewable term life. He outlived every renewable policy that was given to him until he turned 85, and he completely didn't have any more coverage because this particular carrier didn't provide term life coverage after the age of 85. So these are the things that you need to be aware of, and these are the things that you need to look into when purchasing term life. And like I say, they're not bad because you can get a great amount for very little coverage. But keep in mind, the older you get, your insurance coverage is going to get more expensive. So look at it like this. The money that you have invested in your policy as in term life or renewable term is, chances are your premium is going to increase way past the cost of what a premium would have been for a whole life or IUL or some other type of policy had you would have taken it out when you got started. Once again, term lives are not bad. Just learn the different riders that you can attach to your term life, and that way you can get you can utilize the term life to its fullest. Another reason people take out term life is for mortgage protection. I think it is a great concept. So mortgage protection is just another term for term life, but you're protecting the life of the person that is responsible for the mortgage. What that means is that if that person passed away or something happened, you're able to take the money and use it to pay off the mortgage or just keep the property in the family. The beauty of this is that a lot of people do take out mortgage insurance with another financial company. And with most mortgage companies, the plan or the contract you take that mortgage out on has to stay with that house. Where with mortgage protection, with some carriers, such as, an insurance plan, the mortgage protection actually follows the life of the person that is being insured. So that means if that person sells the house and purchases another house, then guess what? The mortgage protection is good for the new house. You don't have to go through the hula hoops of signing and just reinstating everything. The only thing you do is just do a change of address, but that person still keeps that mortgage protection. So it is a great way to use term life. That way you can keep the property or whatever assets you may have in the family. Term lives are also used as riders. We have term life that we use for children riders. The beauty of having riders for grandkids and spouse is that you can insure yourself, and for a cheaper rate, you can add on those riders for grandkids when it comes down to grandparents or parents for kids or spouse for spouse. That is great. We'll take a deeper dive because you got carriers out there that will allow grandparents to take out a whole life on themselves and for only $1 insure their grandkids, and sometimes up to a couple of them. And that $1 can still purchase you as a rider, term rider. It can purchase you $5,000 worth of coverage for your grandbaby. But we'll take a deeper dive in that when we venture off into the other types of insurance. So I hope this information about term life was very useful. I hope it brings about some type of awareness. If anything, I hope it helps you to begin to have those conversations that is hard to have with each other in the community, in your family. And I look forward to bringing you more information. Thank you.